This video is going to be on the megaphone pattern. It's also known as a broadening formation. Now, a megaphone pattern can be either bullish or bearish in nature, and they're formed by connecting as many peaks and valleys as possible, so those support and resistance levels. So ideally, you want to get at least 2, but 3 or more peaks and valleys to connect, and you'll see, I'll show you a couple examples. When you connect those peaks and valleys, you'll see that the channel, that the price channel kind of widens. Whether it's going up, it widens at the top, or it widens at the base as it's falling down. Now, this first example is of the SPY on a daily chart, and you'll see that there's a bearish channel right here. So you see how I'm connecting this peak to this peak to this peak, and it kind of fans out. So I extend my lines out into the future, because then that shows support and resistance levels in the future. So price will naturally, at some point, want to gravitate back to it, right? So this is where you got to kind of be aware of where price is, but it doesn't do it exactly in your timing, right? That's why you want to put it out to the future and watch what price action does in the future. So you'll see when I'll just kind of do this here a little bit, bring it a little bit closer. You see how it kind of widens right here as it's falling, and price right now. So this base is connecting to this base. Before it was hitting this base right here. So this is where, again, you can readjust it. And so this would be a support level, right? So now if you were looking at SPY, you were looking to purchase it or see what it's going to do, this is an important support level. Now, what's going to happen with it? Is it going to go up? At some point, possibly, but it could go right up here, a couple candlesticks, and then fall back down, right? So you can see this will be an important support level. If this breaks, then it fails the pattern, right? Now, if price goes up, then you watch angular resistance up here, and then you could also do, obviously, horizontal support and resistance lines. So as how you're connecting those megaphone line or the angular support levels for the megaphone pattern, same thing with connecting those horizontal support and resistance levels. Connect as many peaks and valleys as possible. And so when you're connecting those support and resistance levels, you always look left on the chart, and then you extend your lines out to the future. So you'll see kind of back here, here's a level right here. I extend it to the future, see how it hits this level out here to these levels, and see right where it goes right now. Important resistance level. So this is in the past affects the future. So when I look left and I just kind of connect these lines here and go right over here and connect them, you'll see right over here, see back over at this level here, it affects right down here at support. So this angular support level goes back to also horizontal support level. So these horizontal and angular support and resistance levels are very important. So you can kind of come up over here, connect this level right out over to here, and kind of shows right over in here. So this is kind of how you're building those support and resistance levels. But so you can see this one right here, it's in a bearish channel. It's nearer to support. Now, what's it going to do? Well, we got to watch right here. You can see the market's opening right now. It's right up near resistance. So we got to watch and see, is price going to go up and continue up? If so, you watch those resistance levels. If it fails, then you watch these support levels. So if you took a trade in this area and you bought off of support right over here, and let's say you were bullish on a bullish reversal, you could use a candlestick close below here as your stop. And then along the way, you decide when you're going to take profits, whether you're doing options or stocks, depending on how much time you have left. If you have an options contract, that's where you got to determine, again, your entries, and then when you're looking to take profits, right? Buy low near support, and then you sell at those resistance levels. Here's an example with GLD on a daily chart of the opposite direction. So price moving up, and you'll see this big broadening formation. See how it widens up here? You see how I'm just connecting these peaks right here, and then I fan it out to the future, and then these valleys right over here, peaks and valleys, support and resistance. So you'll see price goes up, it forms a peak, comes back down, and you'll see right here, here's another important level, comes down, forms some consolidation near support. So I can connect this support level to this support level. out into the future, and then this resistance to this resistance level out to the future. And then you find and you can see these channels in between. So again, this is with all stocks. You know, sometimes it might be more narrow channel, sometimes it might be more widening. So you'll see the Megaphone pattern. Again, it's also known as a broadening formation, but this is where it helps you to find those support and resistance levels when you connect those peaks and those valleys. See, that's why it's important. You want to see here 2 or more. And then when it fans out to the future, then you start to see what happens, you know, when price comes down over here and it starts to consolidate and then it starts to fail right here, right? And so this is where you can adjust your levels right here, and it kind of just fans out to the future. So right over here, I could do the same thing, and you see how it's kind of like another broadening formation. So now it's going the opposite direction. So it went up, now it's going down. And then you can find these channels in between. You can see they're almost like mini Megaphone patterns, right? So if I connect that to here, you can find them in between, right? So see this, how as price is going along, you can kind of do the same thing. Oops, I messed that one right up here. So it's finding these channels, and as you go, you can see right here, you know, these would be support levels. Actually, this one's not really the greatest. You can sometimes, you know, use a moving average line like the 9 EMA, like kind of move it out to like right here, right? Like support level, resistance levels. So this happens on all chart time frames. I wanted to show you kind of on a bigger time frame, but this is where it is, right? Connect those peaks and valleys, 2 or more peaks or valleys. Obviously, if you get, you know, 3 or more, ideally that'd be great. And then you find those channels in between, and those become your support and resistance levels. So when you're trading, it's all about buying low and selling high if you're bullish, or selling high and buying low to cover if you're bearish. So again, if you're bullish, you would buy, you know, on a Megaphone pattern nearer to a support level, and then you would look at a resistance level to take profits. So right, buying low, selling high, buying low down here, and then you can see right here, this would be angular resistance right up here. But if I extend that out to the future from this area right here, you see as price is moving back up, it doesn't go back up to this angular support level. It hit resistance at this horizontal support and resistance level, which was also a cup and handle, kind of consolidated a little bit. But this is where you could also adjust your trend lines along the way. So that's why it's important to extend them out to the future, because you can just kind of, you know, patterns change. Oh, let me change this up here. Patterns fail and they adjust all the time. So I can connect these out to the future, and you'll see just like how price, you see how it's moving up here. It's going into those horizontal support and resistance levels. So that's why doing both are very important, having horizontal and angular support and resistance. So you buy low and then you sell high. And then if you're going short on something, you would sell high near resistance levels, and then you buy low to cover. So sell high, buy low to cover if you're bearish, or buy low and sell high if you're bullish.